Yeah, I think this is kind of the final blow off. I mean, we're at or near the end of the Fed's tightening policy. More and more people are predicting that there will be cuts in the first half of next year. I'm not so certain about that, but what I am pretty clear about is that they have all the cover they need to get out of the way. And even though our rates are high, the key is we're going to be stopping our tightening process before all of our peers. So on a relative basis, we've had this counter trend bounce in the US dollar after collapsing since October, which, as you know, we were very vocal publicly in October that the dollar was going to roll over. Sure
Yes.
enough, it did. And, within months, Alibaba went from 60 to 120, or maybe it was weeks. But once the dollar weakened, so we had a counter trend bounce on the debt ceiling debate, and now we're having a counter trend bounce on this new type of uncertainty. But the end of the day, you got Jackson Hole, and then you've got September. I think in September they'll come out and say we're going to skip again and wait for the data. They'll never say we're done. They'll never declare victory. But more likely than not, they'll say we're done. The dollar can resume its downtrend. I think the big surprise of the second half of this year, which goes completely counter to what everyone is thinking today, with yields blowing out a little bit in the short term, is that the 10-year is going to get bid and yields are going to compress to the low threes.